This is Global Business on CGTN. Welcome to the show. I'm Lily Lu, and these are headlines that we're tracking at the hour. Import surge. China's imports continue to outpace exports in July, marking the fifth consecutive month of faster import growth. Tech shines. It's earnings season for stock markets, and China's tech-focused star market stands out with robust revenue growth. Robot Showcase. The second World Humanoid Robot Games are in full swing in Beijing, showcasing the latest capabilities of humanoid robots. And as usual, let's take a quick check on Chinese mainland stocks when we kick off the show, where we see key indices started this week's trading in the red. The benchmark Shanghai Composite Index finished the day down by about 0.6 points. Mid-caps in Shenzhen down over 2%, nosedive there. But we do see deeper cuts in tech shares in Shenzhen. The China's index finished the day down by 3.2%. We'll take a closer look at who are the market moves and shakers of the day. But for now, here's a look at regional shares and how Wall Street closed on Friday. China's imports continue to outpace exports in July, marking the fifth consecutive month of faster import growth, as the world's second-largest economy deepens its role as a major global buyer. Total imports reached nearly 12.7 trillion yuan, or about $1.9 trillion in the first 7 months of the year. Now that figure went up by 22%. The country has lowered its average tariff rate to 7.3% and now applies zero tariff treatment to 63 countries. It remains the second-largest import market globally for a 17th consecutive year, serving as a key export destination for nearly 80 countries and regions. And China's imports of agricultural products, energy and minerals, including soybeans, beef, crude oil and iron ore, continue to rank among the world's largest, supporting livelihoods and industrial development across many exporting nations, particularly developing and least developed countries. China's growing import demand is on full display in the fruit industry. Take durian, for example. China is the world's largest durian importer. In 2025, China imported nearly 1.9 million tons, accounting for more than 90% of the global consumption, which means roughly 9 out of every 10 durians sold worldwide ended up in China. And demand is still growing. In the first half of 2026, China imported over 1 million tons of fresh durian, worth over 32 billion yuan. That is up nearly 50% on the year. And much of this surge comes through China's land borders with Southeast Asia. One key gateway is the friendship path in South China's Guangxi-Zhuang Autonomous Region, where customs officers are working hard to keep the durian rolling. Wang Tianyu takes us there.
This might be China's busiest port for imported tropical fruits. 1 out of every 3 durians entering China come through here, Youiguan Port, in English, Friendship Pass. It sits on China's deep south border with Vietnam, linking the country to the whole of Southeast Asia. Hundreds of trucks carrying durian and other tropical fruits pass through here every day, and they got randomly inspected for safety. Customs officers test for pests and quality. That keeps every shipment moving smoothly to markets all across China. And this year, there's more fruit than ever. Heavy rainfall across Southeast Asia has boosted the harvest.
This year, fruit imports through Youiguan Port have been strong. In the first half of the year, we brought in fruit worth over 12 billion yuan, or about $1.8 billion, up 40.8% from last year. Durian led that growth. It made up almost 90% of all fruit imports here.
Durian imports through this port jumped nearly 56% in the first 6 months of 2026, and officials expect that pace to continue. More durian from Vietnam is on the way in the coming months.
Our durian business has grown about 15% this year. Right now, most of what we're bringing in still comes from Thailand.
And it's not just happening here. Across China, durian imports grew at almost the same pace as Youyiguan, up more than 57% in the first half of this year. New rail links like the China-Laos Railway are opening up even more routes for Southeast Asian fruit to reach Chinese consumers faster. Wang Tianyu, CGTN, Guangxi Zhuang Autonomous Region.
And now let's discuss the factors behind China's trade resilience. For that, let's bring in Mr. Liu Zhiqing, Senior Fellow of Chongyang Institute for Financial Studies at Renmin University of China. Mr. Liu, thank you for joining us on the program. So China now is a super buyer. How does China leverage its own platforms like the CIIE to deliver real benefits to Global South through trade?
I think China now has a very great, important role as a super buyer or global buyer. It's quite important, especially for those developing countries and the global South nations, because as we know, China has two very strong point that advantage. The first is that we have a huge population, 1.4 billion people. That is a huge market. The market demand is unbelievable. It's unlimited. That's why many countries are eager to have more business with China. And secondly, China is now capable to develop its economy with high quality development in order to meet the demands of the people's needs. So that's why we need different variety of products from different countries with different cultural background or with different designs. That's why we see that the import now in the past month and China has well developed, and we import more than export. This is a very important signal to the rest of the world, especially to the global market, that China will do its best to benefit all countries and all partners in the world, because this import by China will benefit all those original countries that to develop the agriculture, industry, production, manufacturing, talented people, and the service industry. So all this will be benefited to the buyers and our also the sellers. That both sides will have more coordinations in the future.
Okay, so China has this zero tariff policy for 53 African nations. So what kind of changes does it bring to trade, and also what does it bring to Africa's agriculture and social development?
That's a very important step that made taken by China, because as we know, China developed its economy from a very poor condition. 50 years before, we have the similar situation that as the African countries, we know, we understand, and the people's difficulties there. So that's why we have such a policy to support the local development. By doing so, that those nations, they have more capability to spend their effort and the money and the budget to develop the education, medical care, and also to learn more technical points for other countries, also including China. And especially from the service industry, they can learn a lot from this policy. That's why from the social development, those countries, they are really beneficiary from the China's policy, because they will have more time, more opportunity, and then more chances to develop their own industry point in order to meet the demand in their own domestic market.
And also, Mr. Liu, what do you think makes China the most sought-after market worldwide? And also, what role does China play in helping with global economic recovery?
Actually, China's role in the world is very unique. As we know, China is a nation always try to have more cooperations and coordination with all nations, the global market. Because as we always announce that China alone to be developed is not our purpose. We hope the common prosperity, not only in Chinese domestic market, but also in global market. So that's why the state policy of our own interest that also to develop the economy in all the countries with our partners. So that's why China has focused its own technology is also to some point to support the other nations to learn from China, to help with each other. That's why we see that more opportunities and the chances for the other countries that to have closely cooperations and coordination with Chinese market in order to develop all countries, especially for the global south and these developed countries, they have more chances that to catch up with the pace of the modernization.
Well, thank you so much, Mr. Liu Zhiqing. Please stay with us for more discussions later in the program. Shifting gears now to China's A-share market. We're getting into the thick of the interim reporting season, and investors are closely watching how key sectors are performed in the first half of the year. And among them, the STAR market, which is China's tech-focused board, has stood out with strong revenue growth and robust profitability. Our reporter Zhao Xuetong has more.
The STAR market is delivering a strong performance this interim reporting season, with the total revenue of companies that have released their half-year results growing by around 30% year-on-year, and more than half of the companies posting net profits. Analysts attribute the broad-based strength to a tech sector upturn, as AI-driven computing demand ripples upstream through memory chips, printed circuit boards, and other key components. Biotech also outperformed, with several innovative drug makers beating expectations. The earnings underscore a virtuous cycle linking technological advancement, industrial upgrading, and capital flows. The momentum aligns with policy signals from Wu Qing, chairman of China's top securities regulator, who pledged at the 2026 Lujiazui Forum in June to support hard tech companies in quantum technology, biomanufacturing, embodied AI, and other sectors to list on the STAR market.
More funds are attracted to invest in hard tech and AI-related sectors. Monetary, fiscal, industrial, and capital market regulatory policies are converging to channel more funds into hard tech and AI sectors, reinforcing China's push for technological self-reliance.
Foreign investors are also paying close attention to China's hard tech sectors.
Investors increasingly recognize that China is not only a consumer of AI technology, but also a significant innovator across areas such as AI models, cloud infrastructure, semiconductors, and intelligent manufacturing.
With strong earnings, sustained policy backing, and rising investor interest, China's hard tech sectors are proving that the innovation-driven growth is more than a narrative. Zhao Xuetong, CGTN.
And the sustained release of AI computing power demand has become a key engine driving performance in China's tech manufacturing. Semiconductors, memory chips, and AI hardware have emerged as highlights of this year's interim earnings season. Foxconn Industrial Internet, which is a major AI server manufacturer, posted nearly 96% year-on-year net profit surge in the first half of the year, driven by strong demand of AI services. And Capricorn, which is a leading Chinese AI chip maker, saw its net profit jumping 122%, underscoring the rapid growth of the domestic computing power supply chain. In the meantime, memory chip maker Lonz's rode the chip prices rally, with net profit skyrocketing over 700 times year-on-year. And time to get a check on equity markets on the Chinese mainland and the rest of Asia. And for that, we cross over to Timothy Pope. Happy Monday, Tim. So China's mainland stocks have had a rough start to the week. As we can see, key indices closed in the red, particularly in tech and growth stocks. So what's been driving today's move, and what should investors be watching over the rest of the week?
Hi there, Lily. Yes, A-share markets seem locked late in this cycle of rally and rout for those growth stocks, particularly in the AI and adjacent sectors. Today was very much on the rout side, so while the Shanghai Composite Index was down 0.6%, we saw the Shenzhen component down more than 2%, the China Export down 3.2%, and the Star 50 down 3.1%. And those last three are more exposed to the tech rally than the Shanghai Composite. The big losers, as I said, were AI hardware companies. Shenzhen Gongjin Electronics was down 10%. Zhongji Innolight fell more than 7%. But they weren't alone, because the other big winning sector of the last few weeks, biotech, was in retreat today as well. Investors were rotating into gold and coal stocks as well, and agricultural stocks extended the food security trade rally that we saw at the end of last week. There were a number of stocks across those sectors, all of those that were hitting the upper limits of trade today. The rest of the week is going to be mostly about earnings. The end of August filing deadline is fast approaching. Friday will be a really big day on the earnings calendar. We've got BYD, PetroChina, Shenhua Energy, and a lot of the big banks as well. Earnings that we're going to see for ICBC, China Merchants Bank, and others will give us a bit of an insight into how much pressure the big banks are under with their margins. BYD is also going to be an interesting one in the light of the government's anti-involution campaign and its efforts to avert a bit of a race to the bottom in the EV sector. And before we get there, there are NVIDIA results in the US on Wednesday, which will doubtless impact every stock in the AI space, Lily.
And also seems like the Hong Kong is under pressure as well today, but Tokyo market still seems a bit more resilient. So what's happening over there?
Yeah, a surprise share placement by Alibaba caught investors off guard today and really dominated sentiment on the Hang Seng. That index ended the session down by 1.9%. It wasn't just the size of Alibaba's share placement, although that was the biggest follow-on offering of new shares by a company on the Hong Kong Stock Exchange at $10.2 billion worth. It was also that they sold those shares at a really hefty discount, 8.4% below Friday's close. The only thing that wasn't surprising about this listing is what Alibaba's going to do with the money. You're not going to need three guesses. It's going to fund AI infrastructure, AI models, and chips. But it did have investors worried about stock dilution and whether these investments are going to pay off. Alibaba's shares slumped 8.6% by the end of the session, which makes the offering price look a bit like a self-fulfilling prophecy. For the rest of the week, Hong Kong is going to be focused on earnings as well. NVIDIA, obviously, that's going to be closely watched by everyone. But there's also Wuxi Bio on Tuesday, which has been a really strong stock recently, and Li Auto on Wednesday, another test for the EV sector. In Tokyo today, the Nikkei 225 was down a little bit less, 0.7% lower. Its AI heavyweights were slipping again on their lead up to the NVIDIA earnings that we're going to see later in the week. Quite a few of the big names on the Nikkei are exposed to NVIDIA. Advantest being one of them, down 3.9% today, and the tech investor SoftBank another, down 5.3%. But aside from the AI results, this week is increasingly a will they, won't they story about the Bank of Japan and interest rates. The market consensus seems to be swinging more towards expecting another rate hike in September. The BOJ's inflation reading will come out on Tuesday. That's for underlying inflation, just before the market closes. And there's also going to be a key speech from BOJ Deputy Governor Ryozo Himeno on Thursday that I think the markets will be watching pretty closely for clues about which way the bank is going to swing in September on rates, Lily.
Great stuff. Thank you so much for the market wrap. That's Timothy Pope in Shanghai for us. And you're watching Global Business on CGTN. Still to come on the program. Second World Humanoid Robot Games are in full swing in Beijing, showcasing the latest capabilities of humanoid robots.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
The second World Humanoid Robot Games are underway in Beijing, running from the 22nd to the 26th of August at the National Speed Skating Oval. The 5-day event features 51 competition categories and over 1,300 matches across 9 units. And today's events include track and field, football, free combat, table tennis, floor exercise, and scenario-based challenges. Over 600 teams from 16 countries have brought their robots to compete, showcasing the latest capabilities of humanoid robots. Our reporter Yang Chenxi and Chen Jiaqi have more.
This is what it looks like when a whole industry is booming in China.
We are here in Beijing at the opening ceremony of the second World Humanoid Robot Games. More than 2,000 robots are competing across 51 events.
It may sound bizarre. Robots fighting, robots playing football, robots playing tennis. But this isn't just a giant spectacle, because every event is testing something that could eventually matter in the real world.
These humanoid robots are using 5-fingered robot hands to control musical instruments, testing delicate, flexible manipulation. On the football pitch, robots have to sense the environment, control their bodies, and coordinate with teammates. This year, Brazil brings a national soccer team.
I think we will have a great result also as the same as the soccer players. The robots will do a great result as well.
On the tennis court, robots track an incredibly fast-moving ball and make split-second AI-driven decisions. A fighting robot, it tests power, balance, and motion control. A new generation of young Chinese AI talent is chasing big dreams.
We
may be young, but our technology is solid. Personally, I want to explore vertical AI applications. I hope to integrate AI with more hardware to generate greater practical and commercial value.
We are a startup-oriented team developing marine robots.
These games bring together upstream and downstream players across the robotics supply chain.
Many component sectors, including sensors, cables, and even housings, are getting better guidance from these games.
The 5-day showdown is only getting started, bringing together the brightest minds from around the world to push humanoid robotics one step closer to the future.
During the opening sessions, robots have already broken the human world records in the 100-meter run and standing vertical jump. But again, it's not just about the competition. It's about pushing the tech frontier and bringing smart machines closer to people's homes. Yang Chengxi and Chen Jiaqi, CGTN, Beijing.
China captured half of the global humanoid robot market last year, according to the Chinese Academy of Information and Communications Technology. The sector generated over 8.5 billion yuan in revenue in 2025, with shipments surging 5-fold to 12,000 units. Now, that strong performance is backed by technological advantages of Chinese firms. There are now more than 150 companies specialized in humanoid robots, including industry leader Unitree Robotics, which recently went public. Data from iResearch shows Chinese companies now hold 2/3 of global patents in this field, with 75% of core manufacturing components made entirely in China. And now for more on humanoid robot market, let's welcome back Mr. Liu Zhiqing from Chongyang Institute for Financial Studies. Mr. Liu, so the scenario-based contests at this robot competition test real-world robot applications. So what key tech breakthroughs have been made in these scenarios?
I think there have some major breakthrough in this game, and we see that this competition are quite positive and very strong, send a very good signal to the global market. The first point is a very important thing that this time that we see that the humanoid robot become more intelligent. But before, if we see that most of the robots have some AI, that artificial intelligence. Nowadays we can see some robots become also SI, that is a self-intelligent. They can make decisions by themselves. They can think by themselves. They can do something with their own logical ideas. So this is a very important technical breakthrough. If all these robots can be implemented or used in the market, I think that will have helped the social progress in a different way. So this is a very important challenge, not only for the AI engineers, but also especially for the whole society. We should learn more things about the latest technologies.
And also, China makes up more than 50% of the global humanoid robot market. So how do market demand and technological innovation help to boost each other?
I think it is quite important to have a very good coordination between each other. As we know that at this moment, the humanoid robot has three different ways. One is for general purpose. General purpose is normally to improve or to ease the housework, or for instance, for the caterings or for cleaning. This is for general purpose. The second, quite important, for special purpose. This special purpose can be used for medical care, even for the high level of this surgery or operation for most of the important critical patients. This is very important. As we always say that for special purpose, for instance, for some industry, for very different difficult environment conditions, that this special purpose humanoid robot can really help the human being. And the third is that the robot can be used for all purposes. We call it an all-round, all-purpose robot. All these three different kinds and types can be really well managed and coordinated together, because everyone is already demanded by the market, by the people, different groups, and for different needs. So that's why we have to coordinate and make good, well-balanced and management of this latest technology.
And how will the games that we're just talking about, the World Humanoid Robot Games, how do you think competitions like this can help to speed up real-world deployment of robot technologies?
Surely all games can accelerate the people to think, to find more solutions for today's difficulties. Because we are facing different difficulties and the challenge, how to make the humanoid robots more in the direction of serve the people and serve the daily life. So all this will find the difficulties how to make a coordination. So this way that we find many engineers now trying to find a good solution and the best solution that to solve all these difficulties, not only for the supply chain, but also they need something that from the demand side, how to make all different groups for different needs to have the different supply, especially for the same quality delivery of the robot. Because the robot can work in three different advantages. For instance, cost saving, high efficiency. Third is high quality, because they can meet all this demand of what we need. So this is a very important advantage for the humanoid robot development.
Well, thank you so much for your insights. That's Mr. Liu Zhiqing from Chongyang Institute for Financial Studies. And still to come here on Global Business. U.S. President Donald Trump warns of a devastating impact on Canada after Canada announced retaliatory tariffs on U.S. goods following the breakdown in trade talks.
A vast land of 1.4 billion people. The world's second largest economy. Home to stories of the unexpected, the unimaginable, the breathtaking. Stories that touch the soul. Feel the speed, the passion. Enjoy spectacular natural and cultural landscapes. Feel the thrill of cutting-edge innovations. Discovering China. Global Biz. China Travel. We present a China never seen before. 24/7 at your fingertips.
Welcome back. U.S. President Donald Trump has hit back at Canada after the country announced retaliatory tariffs on U.S. goods following a breakdown in trade negotiations. The Trump administration has warned of a devastating impact on its northern neighbor. Jagrudi Davi reports from Washington.
Well, in an early Truth Social post, Donald Trump said that Canada wants the benefits of being a state without being one. They have also charged our grape farmers for many years massive amounts of tariffs, no more. The Canada comment in particular, I guess, is reflecting on comments he's made previously. He's talked about adding Canada as the US's 51st state, obviously an idea that Canada's premiers have pushed back against. Donald Trump has also made comments about Mark Carney and his predecessor Justin Trudeau being future governors of Canada. And these jibes come after Mark Carney said Canada would match US tariffs dollar for dollar after those crucial trade talks fell through. The US trade representative is saying that Canada declined the deal even though it was in their favour. Canada was saying unfair last-minute changes meant that they could not accept. So now we're seeing fears of a full-on trade war between these two neighbours, putting into question the US-Mexico-Canada trade pact as well. Canadian officials have in the past mooted this as a suggestion. Let's cut off energy to the US in retaliation for tariffs, they've said. Now, this could have huge consequences because Canada is the US's largest foreign energy supplier. It provides more than 60% of the US's crude oil imports, nearly all of its imported natural gas, and more than 80% of its imported electricity. So this shows how integrated the two countries' power grids and refinery chains are, and this could cause any threat to cut off. If that is followed through, that could have huge consequences. You could see unreliable electricity in areas of the northeast of the United States, or the Midwest, where there's a reliance on electricity. You don't really have an alternative for the Canadian crude in the same way, like Venezuelan and Mexican crude, for example, is a bit different. So the refining process is different. You could also see differences in price pressures in states that are reliant on Canadian crude and electricity. So these are just some of the implications that could happen. Now, it's questionable as to whether the US would whether Canada would follow through on something like that, and as an escalation. But it just shows the language that's being used. It just shows how serious this situation is.
Canadian businesses are adapting to the impact of the trade war with the U.S. Many are trying to reduce their dependence on American imports and diversify their suppliers. The government says it will roll out more support measures. Nina DeVries reports from Toronto.
As rain beats down on a gloomy afternoon, Canadians are trying to come to terms with the new reality of 50% tariffs that have hit businesses here. This includes tariffs on original artwork.
So all the original art that we showcase, anything shipped to the States will be under the 50%.
Nancy John's business has been operating in Windsor, Ontario, just across the border from Detroit, for almost 20 years. She also has an online store, and now there's a message on it warning U.S. customers about the 50% tariffs they now face. Nancy says she's not surprised the trade talks broke down in the end, adding that she misses the stronger relationship Canada and the U.S. once had.
I've always thought of Detroit as part of Windsor. We're interchangeable, really. So many friends, family work stateside, and they come over and they're like, oh, we're just sad. We're sad that our countries are fighting.
U.S. Trade Representative Jameson Greer says Canada refused what he said was a good deal that included tariff cuts on steel, automobiles, and lumber. But in a statement released late Friday, Canadian Prime Minister Mark Carney said, quote, last-minute changes in the U.S. proposed terms were unfair, uneconomic, and called into question the reliability of any deal. He later said this included trying to exempt medium and heavy-duty sized vehicles from auto tariff relief.
Walking away from a bad deal, and what comes next?
Some experts say the Prime Minister's decision was difficult but necessary. Canada is now the first country ever subjected to tariffs under Section 338 of the 1930 U.S. Tariff Act. In an email to CGTN, the head of one Canadian policy and research group says countries globally are watching how other governments react to growing U.S. economic pressure. Veena Najibullah writes, how Canada manages this confrontation, whether it can absorb the economic costs, preserve domestic unity, defend its policy, autonomy, and successfully diversify abroad, will shape how Canada is seen around the world.
Canadian brand Pink Martini.
Meanwhile, over in Toronto, boutique owner Daphne Nassani is making an Instagram story to promote her clothing products. She says when there were talks of the first wave of tariffs from the Trump administration last year, she decided to pivot her business and has reduced American products by around 60%. She's also encouraging customers to buy more Canadian products.
I wanted to minimize the dependency on the American brands that I was carrying in the store. So I slowly started to decrease it, change it up a bit. And in that time, I ended up finding more Canadian content, European content. And so now I have that's incorporated into the store.
Businesses hit with these latest tariffs will likely be aiming to do the same.
The Canadian government has said there will be additional measures of support for businesses and workers affected by the U.S. tariffs. More details on that should be coming in the next few days. Nina DeVries, CGTN, Toronto.
And earlier we talked with Professor Ian Lee from the Sprott School of Business at Carleton University. He's an expert in Canada-US trade and economics. Professor Lee says it is almost impossible for the two economies to decouple from each other, but challenges remain to achieving a deal.
There are some Canadians who say we should just walk away from the United States and we will pivot to Europe and pivot to Asia Pacific. And while many Canadians, I certainly support the idea of trade diversification, increasing exports to Europe and Asia Pacific, the idea that we can walk away from the United States, where we have shared 2.5 centuries, and in a border that is 8,800 kilometers long. And according to Statistics Canada, 90% of Canadians live within 150 kilometers of the U.S. border. We're strung out across Canada, hugging the U.S.-Canadian border. And our businesses, we have integrated supply chains. And there's been cross-marriage going on for 2.5 centuries. The ties are so deep, economic, cultural, geographic, that it is simply not credible to suggest that Canada can just leave and stop dealing with the United States. I won't sugarcoat it. Canadians are, I've never in my lifetime seen Canadians so angry, so many, so angry. I mean, just it's incredibly emotional. And I think that that's making it more difficult, much, much more difficult for the leadership, for the Prime Minister and the Premiers to come to a deal because there are so many Canadians so angry. There's almost half of Canadians don't want any compromises whatsoever. Well, of course, you cannot have trade negotiations between any two countries without some compromises on both sides. So Mr. Trump is making it far, far more difficult to come to an agreement.
Time now to get a check on some other business headlines we're tracking at the hour. The U.S. dollar lingered near multi-month lows after the U.S. Treasury's bond buying plan rattled traders. In the meantime, Bitcoin jumped nearly 23% and gold prices rose by 5% last week. Investors are also eyeing potential sanctions on Iran and the Fed speeches from market cues. Oil prices have eased, with the Brent crude falling 1.4% and U.S. crude falling nearly 2% at 1 point on Monday, ahead of the U.S.'s sanctions announcement on Iran. The decline comes after a 6.6% gain last week. Markets are watching for potential supply risks from the Strait of Hormuz. And banks in the Republic of Korea have reported a 6.4% drop in net income in the first half of the year to 13.8 trillion won. Record high interest income was offset by steep non-interest income declines from securities losses. And the Bank of Korea raised its key rate to 2.75% in July amid inflation pressure. Shifting gears to Edinburgh, where the Edinburgh International Festival, which is one of the world's most prestigious annual arts celebrations, is currently underway. Every August, the event draws millions of visitors from around the globe. The year's edition also holds particular significance this year, as it is the first major international event to take place since the city introduced its new tourism tax in July. Jeff Moody has more.
Edinburgh in August, awash with performers, a city bloated with artists, producers, promoters and tourists. Nearly every street a show. nearly every building a venue, from high art to backroom stand-up comedy.
So did you hear the one about the city that hosted a whole series of festivals every August? They generated almost $700 million for the local economy.
Performers can gain exposure from a stint at the festival, although very few make money. But the city does.
The collected Edinburgh festivals, we're second really only to the Olympics and the Football World Cup as a ticketed event. We happen every year in this city. The Olympics and the World Cup happen every 4 years and never in a city the size of Edinburgh. So it really is a significant cultural undertaking each and every year in August.
And brings in a huge financial gain to the city as well.
Absolutely.
And that financial gain is set to rise because a new tourism tax has come into force and it's proving controversial.
The idea behind this tourism tax is that visitors pay an extra 5% on top of their accommodation costs, and that money goes into supporting the city itself.
The revenues from that will do two things. One is to benefit the infrastructure of the city to support the very high visitor numbers, and secondly also to support arts and culture, which are the driving force behind a large part of that visitor number.
It's thought the tax will raise an additional $10 million in August alone. But there's a problem. The city has just 14,000 hotel beds, so prices shoot up. $500 a night, $1,000 or more. The rules of supply and demand at their most brutal. For private accommodation providers, inflated prices see them through the lean months. But for cash-strapped performers, an additional levy is the final straw.
In 2024, it was particularly bad on the accommodation front, so we spent the whole month on this caravan site. We're getting an hour bus in and an hour bus out every day, so 2-hour round trip to get in and out of Edinburgh. I know some other people stay in Glasgow now because they can't really afford it here, so it is still a problem.
This is the first year of the new tourism tax. When the visitors go home and the streets return to normal, the analysis will begin. Will the benefits outweigh the concerns? Will visitors keep coming back? Or are the festivals pricing themselves out of the market? Jeff Moody, CGTN, Edinburgh.
And with that, we've come to the end of this edition of Global Business on CGTN. Thanks for being with us. I'm Lily Lu in Beijing. Till next time, bye for now.